All right, taking a look at the banks right now. Despite this story that's making rounds in the Wall Street Journal today, over the weekend, and the Financial Times, that they're going to raise capital requirements. In other words, the government wants them to have more cash on hand in case everything hits the fan. And you would think that that would hit those stocks, particularly the big banks, at a time when they've been the sort of the back support for a lot of the wobbly small and medium-sized banks. I want to get the read on all of this right now with Alan Nuckman, Bullseye Option Chief Market Strategist. If it's a worry, Alan, it's not really evidencing itself. And a lot of this was telegraphed and sort of spoken of for some time. So what do you think?
Well, I'm going to use your own words, Neil. You said you're a positive guy and you've been so for decades. So optimism wins. And I'm looking for actually a bullish bank contagion breakout. If you look at the banks, the price action is very, very attractive and very bullish. Let's look at the Dow is not really participating in the rally yet. The Q's led, the tech stocks led. Right. Then it was the S&P breakout. Now let's see what happens with the Dow. And if you look at the Dow, what's holding it down are the banks. BAC has a PE of 8. Wells Fargo, JP Morgan, a PE of 10. Citigroup, a PE of 6. And they're making a bottom base. And I'm seeing bullish leveraged buying in the banks that are about 10% off their February top. So I love the price action, and that's really what it's all about here in the last months. 2023 has been all about price, and it has been positive.
You know, it's an interesting observation, as many of yours are, Alan. You know, you could argue that this will lead to a concentration in the big money center banks. One could eat up the other, which is probably the exact opposite of what people thought would happen during the midst of the financial meltdown, that they were getting too big to fail, and we had to watch that. What do you think?
Well, you and I talked a couple months ago. What we saw in March was a unique situation for a bank bust that was not, operated properly. And we both agreed this was not 2008 or 2009. And it's been proven not to be, obviously.
Absolutely.
So if you look at XLF, the financials are doing very well still. I think they have a lot of upside potential. And for this market, it's about risk reward. You're going to see some money maybe flow from some of the big movers, the Apple, the Nvidia, and stuff like that, into better risk reward plays. And I really like where the Dow stands right now, even though it's only 30 stocks. The banks really make up a majority of that. And so they've got some really good upside potential here. And what I'm seeing is a lot of option action. And something I look for, and we're in the options markets over my shoulder here, something I look for is that when you see new lows, which we saw in Bank of America, but you don't see new highs implied volatility, that's a sign that the market's going to turn because the sentiment is shifting. We saw that in Apple back in January. We saw that in Meta back in November. So that's when the psychology shifts and these stocks snap back because they're so oversold and so many people are going to be forced to take profits on their shorts. I think this is a great segment to keep an eye on right now. Are the banks is where, that's where we keep our money. And I don't think they're going out of business anytime soon with rates. They pay their depositors nothing, and they get 4% in bond overnight. So they're making the money.
They are making the money, and then some. Alan Nuckman, always good catching up with you. You're a refreshing kind of a guy, smart guy as well.
Thank you.
Alan Nuckman, the Bullseye Option Chief Market Strategist. All right, have you been taking a look at what's been going on with Bitcoin? Just a bit of selling pressure. See what I did there? Bitcoin, bits. Okay, more after this.
Nothing's ever gonna move it when the bones are good. The rest don't matter. Yeah, the pain could peel, the glass could shatter.